14 points. Hillary Clinton surgically attacking a very tiny but growing niche on Wall Street. She has her eye on a tax that she says could curb a mountain of risk in the controversial arena of high frequency or flash trading, as it's called. This matters to anybody, all of you retail traders who are getting beaten in the trading game by high-speed HFT traders. Remember the uproar over Michael Lewis's book Flash Boys? Just one day after its release in March of 2014, the FBI launched an investigation into high-speed trading. Hillary's proposed tax would target a trading strategy called spoofing. What does that do? Well, it entails submitting fake bids to lure other investors in, and then suddenly withdrawing those bids and those orders once they see the price level reach that they liked in the first place. It's a practice her campaign says makes markets less stable and less fair. Will it? Seth Merrin is the CEO and founder of the global institution trading network called Liquidnet. He joins me now exclusively. Liquidnet is known for its so-called dark pools in trading stocks. Seth's here. We're thrilled. We're also joined by Charlie Gasparino, who broke the story yesterday right here on the show that Hillary was going to launch an attack on Wall Street and try and reform it. And now at this hour, she's just put out a Bloomberg op-ed with the headline, Charlie, "My plan to prevent the next crash."
I would just say that this plan will have very little to do with preventing the next crash. What she went after in terms of structural reform of Wall Street is very small potato stuff. The spoof trading of high frequency traders is marginal. It may screw some professional traders in the market. It has very little impact on overall liquidity. Some of the other reforms, quote unquote reforms she proposals, like preventing banks from putting 3% of their money into hedge funds, a loophole in the Volcker rule. Even if they weren't allowed to do that, it would be small potatoes. Increasing the statute of limitations from 7 to 10 years. Come on. Okay, but it ain't happening anyway.
Specifically for the high-frequency trading, Seth, the spoofing issue does start to look a little dicey. They're submitting orders and then suddenly canceling them once the herd follows. It almost lures people in. Do you see anything manipulative about that? Because she does, and feels that once you fix that part of it and maybe tax canceled orders that look a little suspicious, then you clean up HFT, high frequency trading.
You know, there are lots of things that are bad on Wall Street and lots of things that can be cleaned up. The thing that concerns me about this proposal is that it's so micro, it's so narrow in focus, and there are so many other issues that can be tackled, have to be tackled. It's like putting your finger into a dike and then all these other leaks are happening around you. What I would like to see from a candidate, a presidential candidate, is something a little bit more inspirational, aspirational, and says, look, if I'm elected, I'm going to make sure that these markets are going to be the most efficient markets in the world. And how am I going to do that? As opposed to just targeting something that really is not going to have an effect.
And let's be clear here, spoofing, let's just say there's an issue, a problem with spoofing, and we could debate whether it's a problem or not, because some people do cancel orders when they're not spoofing. Yeah. Let's say she does this. You think this will stop the next financial crisis? This has almost no impact on the average investor. Zero. The average investor places their trades through with E-Trade or wherever, which has doesn't really come in contact
reason, Charlie,
with spoofing or with high frequency traders. Maybe your mutual fund may get screwed every now and then by high frequency trader, but those mutual funds actually know how to deal with that better now than ever before. This is really, really micro, and it's not going after the problem. And by the way, do you know people do cancel orders?
Well, of course, but when you see massive repetitive behavior, it's almost like pulling the fire alarm, Seth, in a movie theater. People run out, leaving their purses and their popcorn. The person who pulled it comes running in, takes some of it, and then says, "Oh, no, fire! I mistook that smoke for something." It's not a systemic issue. But it is.
Is it a systemic issue?
No, it could eventually be, Seth. I mean, we had Bart Chilton on Maria's show this morning saying that's actually an interesting point, and then she had a trader who said spoofing is a problem.
So
spoofing's bad. There's no question that spoofing is bad.
So why not attack something bad at least?
Because what I want to see is I want to have investor confidence back in this market. I want the most efficient markets I can have. I want to make sure that our capital market formation is the best that it can be. And I want somebody to focus on that. And there are ways that we can improve that, which will encompass all of this.
And by the way, it's way beneath her pay grade.
She's not.
Hey, come on.
She's not
the president of the United States wants to stop spoofing.
Right.
What, are you kidding me?
It's a part
It's
of
a
the
joke.
bigger plan. Part of the bigger plan.
It's actually hysterical.
That she believes
it should be a Saturday Night Live
will
special.
Prevent the next crash.
It should be a Saturday
Tough
Night
to
Live
prevent a crash.
Should be a Saturday Night Live
Seth,
special.
thank you. Charlie,
Pleasure.
thank you so much.